Good afternoon, guys. Today is January 4th. It is Monday, the first trading day of the year. We're going to go ahead and take a look at SPY, IWM, the transports. We'll take a look at the Qs and a couple charts, a couple trades we took today. One in SPY, one was in Tesla, and then we'll take a look at FUBO. Welcome. This is Patrick, and you're trading with Prime. Okay, let's see. First thing right off the bat, I want to take a look at the CBOE equity put to call ratio. Now, this is just the equity. We could look at several of these different charts, but just kind of to give you an overall viewpoint of what we're looking at. We do see the beginning of this last year of 20. We saw what was appearing to be a market top, and you kind of see that reflected in the CBOE. And this basically represents the number of people that are holding calls versus the number of people who are holding puts. And you see this kind of run up right here in equity put to call ratio. What that means is that's more and more people buying puts as you see the market coming into a bottom right around March 11th in this area, March 11th, 12th of 2020. And then the market has been rallying ever since. And it's had its kind of ups and downs throughout the year, but what we do notice is as the equity put to call ratio gets down closer to the 40 range, between 40 and 50, you start to see what, like we saw in 2020, where you see like maybe it could be a market top. Now, it doesn't always mean that it will be a market top, but it's something to keep in mind. Do we want to be buyers at the high prices, or do we want to let price either consolidate in time, or do we want to see price consolidate in price? So as you can see, recently we had this bottoming here. It's this pretty extended period throughout here of extreme prices, which means a lot of people are buying calls. And the thing is when you have too many people loaded to the boat, into one side of the boat usually rolls over, or it can roll over under the right circumstances. And recently, the last couple days, you do see the number kind of ticking up here, which means people are selling off a little bit on the call side, which might be a good thing for the market. Let's take a look at the 10-year. This is the last year. Let's see if we can get the 10-year in here. I don't know if it'll do. Oh, I got to do a trial. Let's do the 3-year. And as you can see, here's the 3-year. Same thing. As you see the equity put to call ratio get to the bottom, you see the market, what are quote unquote market tops. And you saw another one back in here. This was 2018, the trade war that was going on. And we saw that was the trade war. In 2019, it was more about the repos. And so what we see recently is we see an uptick right here at what was the market bottom in 18. And then, of course, up here is the market bottom in 2020. So we'll see. Time will tell. Let's see what happens over the next couple days, next couple weeks / months. Next thing I want to look at is a couple charts here. First, we're going to take a look at the SPY. And so this is, I believe this is the 2-hour time frame. Well, let's see here. 2-hour time frame, and I kind of want to look at these rising wedges. I don't always like to trade them, but you see one back here. This was coming back into August. The top over here is like the August September top, and then it broke through the rising wedge, and then it found support down in here, consolidated, and then it broke out again. And so recently it's been putting in this kind of wedge pattern throughout here, and it kind of makes me wonder. Usually what we like to do is once it breaks the wedge, we like to measure down here. So that's about a 4% drop. And so you could either measure it to be conservative, you can measure it from the top, and that would give us around a 360 price target. The interesting thing is that price target would be also this 200 period, which is the 200 2-hour moving average. And so that would come in line with that. But also you have a little bit of consolidation back here and support area. And then the last thing is you have where the market found a top back in August going into September. So if I drew a line straight across there, it would make sense that the market would find some sort of support. If today's low doesn't hold, that's the next likely area that I think it would be headed. Let's take a look at the next chart. This is the Qs. And same thing, you have over back here, you have the September top. It broke down. And then it gets a little bit choppy in here. Once we found some sort of buying down here and it broke out, it kind of has been trading up ever since. And so if you drew the same kind of rising wedge pattern through here, you would almost see the same thing where you can almost see kind of the same thing where it started to break down. It broke through this, and now we found a bottom in here, some sort of support. I'm not sure if it will hold. We will see. But if we do break today's low, I do believe it will come down closer to the 300 price area. Next one is IWM. This one's a little bit different because you had a channel in here, and the difference with this is you could almost draw a trend line going up this way and say, you know what, it already broke. Let's start this over. If you did draw one through here, you could say it already broke the wedge pattern. In fact, I could even draw it from way back here. And this is where you have to be careful, because what the trick, in my opinion, is having several traders, several 100,000 traders all seeing the same price level, and that's what makes good buying opportunities. If multiple traders can see the same thing. If you're drawing trend lines where only 1,000 traders see the trend line, like maybe this one right here where it broke out and then back tested, if only 1,000 traders see it, maybe it isn't as probable with a lot more traders seeing it. So you got to be really careful with trend lines. What I do see in here is more of a channel, and so we broke to the downside below the channel. If we do take out today's low, if today wasn't a bottom, we take it out, I would be eyeing this 185.60 price area, and it could get there pretty fast. It could actually get there in probably a day. So we will see what happens tomorrow. The next one is the transport, same kind of thing. And if you're noticing this trend that we're looking at right now, it's that we are seeing the same thing in multiple charts, and that makes it a little bit more convincing. I'm not saying today was a top. I'm just saying that it would make sense since all of them are doing the same thing. In fact, the transports and the IWM were probably a little bit more weaker before the S&P and the Qs were. So that is something to kind of keep an eye on, these two. The next one is the SPY. This one is the SPY chart from 2019 going to 2020, and you see the same kind of rising wedge pattern. We were watching it all year 2019, and we actually went into, as you can see the dates down here, we went into the new year and we continued rallying. It broke trend, and then it found support, rallied again, and then we drew in another rising wedge type of a pattern. Once it broke that, and then especially once it broke the previous highs of 332.42, it really snapped. The market snapped, and we all know what happened after that. We were all taking part in that. So all of these are definitely interesting to watch. Let's take a look at, now let's go straight into the charts and see what we can see, what's on board for this week ahead. First thing I want to look at is FUBO. And with FUBO, we put out a video a couple days ago, and we said this is probably a really good area to go long, with the understanding that you would have a stop around $26.93 and another stop around $28.40. So those two areas, I kind of expected buying in this area. This was a very good risk versus reward ratio. But this does happen. Sometimes charts do this and it sells off, and it's definitely time to get out of the trade if you were in it. And on a lower time frame, you can definitely see once price broke through support, it really didn't look back. And that's exactly why we are using stop losses, and that's why we're saying, you know, this is a good buying area. But if it starts trading below that on a lower time frames first, maybe the 5-minute, the hourly, even a half-hour chart, that's definitely time to get out of the trade. It's in a clear and obvious downtrend now at this point. On the higher time frame, if you're looking at like the daily chart, like I was saying before, and even the weekly chart, you might have had a weekly reversal candle in here up at the top. But as far as this overall run up goes, it looked pretty good. I would now be eyeing much lower prices. In fact, I wouldn't be in this any longer unless you saw a clear, obvious sign, like maybe a doji candle or a hammer candle with buying stepping in here. And I would honestly like to see this chart get back above 28.40 to be a buyer again. Let's go look at the SPY trade. Took a day trade in SPY, and I apologize for talking fast. I just want to get through these videos, or get through this video. So we took a trade in SPY, and it worked out for a few minutes, and then we obviously got stopped out of the trade. We did post this in the Discord, so if you guys want to be a part of that, feel free to join rtbtrading.com, where you can get the link. So here's the thing: is we fell. I'm gonna do this, zoom in one more time. Lower time frames, I just want to see everyone what I was looking at. And so we do have support in here, which might be hard to see on the screen. You don't even see it back here, but there was support in here, and then you saw this huge green reversal candle. We let it take off, and then it kind of rolled over, and we were using that as the going long on support scenario. Once we saw this 5-minute candle close below, we exited the trade, took the stop loss, and you see the same kind of pattern down here where this is what we're going for. This one is also at support, so you do see a reversal candle, and I don't always just buy into the selling off. I usually let it reverse like it did, pull back, and this second one is called a retracement, and that's what you're going for. You know that if it goes below this price area of the first candle, if it goes below this price area, you immediately be stopped out of the trade. It's a very good risk versus reward as far as a day trade goes, because this 1% in the SPY is based on the options that we were trading, could easily have been a 40-50% run. So definitely worth it if you were in the trade, but again, you got to be really careful with those. Then the last one we're going to look at is Tesla. We also took a short trade in Tesla today, and let me just go to the chart. Let's do the hourly first. You kind of just see this massive uptrend, and the thing that we're looking at is it can definitely continue going. In fact, we could go all the way up to 1,000. And like I've said in previous videos, I don't think that that's what's going to happen, but it's definitely possible with the type of buying that we see in Tesla. You do see this rising. I drew a channel in here, and I don't know necessarily if this would be a I don't necessarily know if this is I don't know what traders are watching. I don't know if they're watching this channel. I don't know if they're watching this possible rising wedge. Another thing that's possible, or if they're just simply watching price action and then they see this, this consolidation period here, and then it broke out and maybe we're taking off. And then so far, maybe this is a bull flag on the hourly time frame. It definitely can be, which would put us above our rising channel. The stop losses that were issued, I believe one was for today's high, and once entered into the trade, you could have lowered it to 731 if you're not out of the trade right now. This could go either way. It's definitely a bullish chart. You got to be really careful swinging these, and in fact, you got to be really careful when you're even day trading these, especially to the short side. You're honestly more probability speaking, you're better off going long on the dips on the dips and the breakouts instead of trying to short. But then again, you can make a ton of money if you're trying to trade these patterns. So that is all we have for today, and we will see you guys in the next video.